Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. This is our forex-technical-analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. Before we pull up our video, we always want to start off our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategy we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our forex-technical-analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. In each video, we look at the prior session's price action to come up with key support and resistance price levels. We'll review the gold chart to come up with leading sentiment. We'll try to create a low volatility and inside bar watch list, and we have an education spotlight at the end. Please send your feedback and comments to contact@dmbfx.com, and let's head to the charts. As we come to look at the week that was in Forex, we start off with the strength of the U.S. market. The U.S. Treasury yields broke up out of the range. The 10-year yields rose about 28 basis points above their 200-day simple moving average for the first time since July. And we saw that the U.S. equity markets rallied significantly, and now we see the S&P is above 1,400 for the first time since 2008. That's multi-year highs, while the NASDAQ, is in all-time highs. So there's some strength to the dollar, and even this week, with the dollar strengthening just a little bit over the past 2 weeks, we're seeing the stock market move in conjunction with that. There's normally an inverse relationship between the stock market and the dollar, and this week there seems to be a correlation where they're both going in the same direction. Now, of course, for me, it's always about what's the catalyst going forward, and you'll see that we really don't have that much both on the stock market side. No earnings, urgency is over. We have to wait a couple weeks for the new rounds of earnings season, and we also don't have much on the economic data for both Forex and the stock market. We have D-Day across the seas, where the Chancellor is going to present his budget to the Parliament on Wednesday. And as here in the States, he's going to have to do the balancing act of trying to create growth in the economy and growth in jobs, while at the same time maintaining austerity measures to keep the debts in check. So that's going to be interesting to see what he presents. And then we have the ECB. We had 2 countries come out and talking about the fact that there's not going to be really any new stimulative measures. The Aussies spoke about it, and the financial minister in Australia talked about it, and another financial minister talked about they don't really see the ECB expanding their portfolio. And so, again, as there are continued concerns about the global economy and whether or not Greece and the pigs, Portugal, Italy, Greece, Spain, whether or not they'll pull the euro down as far as the spreading of their debt crisis. And of course, Greece is really going through it with the approval of their private investors. If you remember, we talked about the importance of 75% of investors have to buy in, and I think they got a little over 80%. So, but right now the ECB is not talking about expanding its measures. So what are we going to watch? Well, I think we're going to watch Osborne on Wednesday. We have the ECB president speaking on Thursday. And we have some monetary policy numbers coming out from Australia. Not the numbers, but the minutes. And then in New Zealand, we're going to see their GDP numbers this week. Let's pull up the charts and take a look. All right, so we're looking at our market sentiment leaders. And the first, we're going to look at the dollar. And the thing that's interesting about the dollar is that usually we have that inverse relationship, market up, dollar down. And we really did get that. But now we see the dollar moving up, and the market was moving up with it, although we got a nice pullback. But notice again, that's why I like to draw my lines. Where did the market fail? Right there at that, right above 81. So it's going to be interesting to see what goes on from here. Again, we're looking for catalysts. And of course, we're looking at what's happening internationally. Our market profile says that 79, almost 80 is our point of control. So we'll have to watch that. But dollar, a little bit stronger. So with the dollar a little bit stronger, what does that do to gold? It's weak. And we'll zoom in there. And we can see how it fell off, even broke the 200 moving average. Now it's coming back up, retesting that 1660. We'll have to watch for a break of 1625, 1630-ish to see if we're coming all the way back down to 1600. But definitely weak. They're strong dollar, weak gold. And for our pocketbooks, it all affects our pocketbooks, but here we are with crude oil. And we can see that 110 is where we kind of leveled off there. So we'll go in there and draw that off. I was watching 114, but, 110. And zoom on in. And we can kind of see 50 moving average acted as support. What was once resistance will now be support at 102. So we'll have to watch what happens with this 102 to 112 price range. We certainly consolidated for a while, and so the market may do that also, especially if this whole Iran rhetoric calms down a little bit. So we'll see, but definitely sideways price action here on crude oil. So as we pull up the charts, we're starting off with the euro dollar, and the one thing we can see is the market is really starting to form out a new range here. And we can see that this 1.303 level is definitely a buying area where buyers are finding value. We can see it right here in the end of January. We see it again, and we see it again, and we saw it again here this week, and even back here in December. So it's not surprising to me see that we didn't fall down to the January lows, and that the buyers did step in here just below 1.303. But as we come back up to our other level, 1.3186, we'll see if this will once again hold up as resistance, or will we pop through like here. Now, you can make some really strong arguments, especially here recently, whether or not this 1.31 price level is strong, because it's not really being honored here in February and March. Now, let's go to the weekly and take a look. And you can see long term, this is what it is. But you could definitely make an argument. Let's go back out to monthly. You can make an argument that I should bring this line, double click on it, and just bring it down here. Let's see how that looks weekly. Monthly. Okay. I'll try and see how it goes. But what this shows when I bring it down here is you can see this range that the market is within 1.303 all the way up to 1.34, and that's where we've been in 2012. So the market, the buyers are finding value around 1.303, and we'll see where we go from here. We're at resistance at the 50 moving average. When we come right to our 1 hour time frame, we can see where we were in the buy zone ever so fractionally. You can see I was watching this tight range. So we went up, hit our long-term moving average, and came right back down. And again, defending the same price level. Really could take this one and drag it down to here. So it'll be interesting to see what's going to happen here. Right now, we're in the neutral zone, and most of our indicators are in a neutral zone also. So sitting on hands, we're in the middle of the zone. Let's see what happens either as we come back to 1.303 or as we get closer up to the 200 moving average. Switching over to the pound dollar, kind of see the same thing here, although much higher. The pound dollar is at the 200 moving average, but you can see this resistance at 1.587. And definitely you can see some buyers around the 1.5642. We can see all the wicks coming in here where buyers have found value here and pushed the price back up. So that's definitely something to watch. We are above our long-term moving average, and we are in a sell zone, and our indicators are getting ready to roll over. So we'll have to watch the strength of this move and notice that we did break out above 1.587, and it looks right now it looks like the sellers are trying to push us right back down. So it's really going to be interesting to see what happens if they do push us back down. Will this hold up as support, Where we failed here and came back in, will this hold up a support and allow for a new channel to begin? Finally, we'll take a look at the dollar franc, and we'll see that we did see the strength in the dollar. Got a little pullback here on Thursday and Friday. There is a little weakness coming down the horizon for the franc and the yen because of their monetary policy. But overall, you can see we have this range of 0.911 up to 0.928. And we popped out of it real quick. And it's going to be interesting to see where we go from here. Will the buyers find value here once again? We also have support of the 2 moving averages. Or will we get a pop down below also? As we come to today's watch list, we're starting off with our low volatility watch list, which is our 1 hour H1 time frame using Bollinger Bands. We're looking for that consolidation after a move. We're looking for the market breathing, channeling, consolidating, and then trying to catch that breakout, preferably in the direction of the trend. Right now, we're going to be watching the dollar Canadian, seeing where that goes from here. It's not set up perfectly, but it is something to watch. As far as our inside bar watch list, which is checking the range of today with yesterday and see if it's inside the high and the low. But currently right now we don't have any candidates. So as we move to our education spotlight, we've been speaking so long and walked you through the steps of how to create a trade plan. We went through the whole thing, and then now for the past month and a half, we're just kind of summarizing all those points. And we're ending with the, where we always put our emphasis, and that is the psychology of trading. That is what we believe makes and breaks traders in today's environment. And we have to be honest and have to be aware of how our emotions affect our trading. When we're fear-based trading, when we're emotional trading, when we're trading biases. There's nothing wrong with having a bias. We all know how much I love Apple. But you have to know it, and then you have to have steps in place to overcome that bias to make sure you're making sane, rational, disciplined decisions. So you want to make sure you take the time to write down 10 things that's positive about how to be a successful trader, and then 10 steps, 10 things you can do to keep you out of trouble. You know those things. You know where you get emotional. You know where your heart rate starts picking up. You know when you start to freeze and analysis paralysis. So what are some things that you can do to help you overcome that? And the best thing I believe is always modeling successful traders, talking to them, take them out to lunch, just like you would any business person. Find successful traders, talk to them, find what they know, and that's why I've been sharing those interview sessions to just share, people that I like to talk to about the market. I have some more coming up for you here in 2012. But take the time, find successful traders, ask what they're doing, and find out how you can incorporate what they're doing into your trading. Please continue to like and subscribe and comment and give us some feedback. You know about all of our products, but of course we want to focus in on our mentor program and how we can help you. And we do have free sessions just to, again, talk with you and give you any general scope of where you may want to go, and then we can dive in and narrow in into you through our paid sessions. And of course, our managed forex account. Let our expertise work for you. Even sometimes you could be the best book trader and the best paper trader, but you may not be the best actual trader. And so put our expertise so that you can free up your time to do your own things. Leading brokers, full transparency, fully regulated. And again, we'll develop a trading plan special for you. Because in the end, it doesn't make a difference what you know and how you feel about it. It's about your ability to be disciplined and focused and pull the trigger on every trade. And we can help you do that. Thanks, guys, and I'll see you next time.